Gavin, we're open to you.
Thank you, Amy, and thank you for everyone for joining us today. This is a sponsored webinar by OFX and hosted by CPA Australia. Today's webinar is titled Cross-Border E-Commerce, What It Means for Your Clients. And obviously a very topical topic, and I'm very much looking forward to today's discussion. My name is Gavin Ord, and I am the Business Policy Advisor with CPA Australia. We have people joining us from all over the country for today's webinar, and I welcome you to this webinar. I would firstly like to take a moment to acknowledge the traditional owners from around Australia and pay my respects to elders past, present and emerging. I extend this acknowledgement to all Aboriginal and Torres Strait Islander people who may be joining us today. It is now my pleasure to introduce today's two speakers. Firstly, I'll introduce David Nichols. David is the Director, Enterprise Development and E-Commerce at OFX. And the other presenter is Michael Judge, who is head of the Australia New Zealand operations with OFX. Michael joined OFX in 2009 and oversees consumer and corporate segments for the Australian New Zealand market. He has over 10 years experience in global financial markets and provides regular insights and commentary to the business community and media, including through Business Insider, Australian Financial Review, Macquarie Radio, BBC and other outlets. David Nichols. David leads OFX's efforts to expand cross-border payment products and the value proposition for businesses. He has 15 years experience in global payments and SME enablement and is a regular contributor to entrepreneur.com, providing advice for businesses with international focus. And talking of an international focus, David is actually joining us from San Francisco. So we do really appreciate your time, David. Today, we'll be taking questions through our Q&A box. Please direct questions to all participants. We will attempt to address the questions throughout the presentation, and we'll do our best to respond to those questions with the time remaining. And I encourage you to ask any questions. For any troubleshooting queries, please send a private message to the host in the Q&A box. It's now time for our session to commence, and I'll hand over to Michael first, who will then hand over to David. Thank you.
To be joining in association with CPA for today's webinar. I think, look, first things first, I think the logical place to start is just to give today's audience a little bit of an orientation in terms of some of the ground that we do intend to cover today. So just in terms of agenda, what David will be covering to start today's webinar will be to give everybody a little bit of a grounding in terms of the size of the opportunity for a lot of businesses who are looking to operate globally. We all know that it's been a very unique period of time, not just for e-commerce operators, but I think the global business environment is definitely looking significantly different to what it did only 12 months prior. David will also be providing a little bit of a landscape view in terms of what is a relatively complex and incredibly large ecosystem, which does support obviously the e-commerce domain in general. Equally, we'll be touching a little bit around trend. So as I said, there has been a lot of emerging trends, not just over the last 12 months, but I think more broadly around the e-commerce space as well. In the later part of the second half of today's webinar, I'll be providing a little bit of insight in terms of our observations around global market trends and how that can obviously translate to some of the key considerations that Australian e-commerce providers and SMEs should be obviously considering when operating globally and managing underlying currency risk. So before I do hand over to David, again, I'm very conscious that a lot of today's audience may not have actually had too much of exposure to OFX as an organisation. OFX is essentially a specialist provider of FX or foreign exchange services. We do specialize in simplifying both the receipt and payment of currencies globally around the world. We're proud to be ASX listed in 2013 and equally proud to represent more than 1 million customers around the world today. Whilst I'm based in Sydney, we do have very much a global team, and David represents obviously our North American business around our e-commerce domain specifically. But we are operating on a global scale across 8 geographies. Look, as Gavin did allude to, we definitely hope that the next 45 minutes or so, it is as interactive as possible. If you do have any questions throughout the forum, obviously we'll canvass them as they do come in. And there will be a couple of polls as well that would ask everybody to participate in as well. So for now, I'll hand over to David.
Thanks, Michael. And hi, everyone. Welcome. Thanks for joining. Pleased to be here and looking forward to taking you through the next kind of 20 minutes or so while we talk about cross-border e-commerce and what it might mean for your clients. I think where we're going to start is just sort of understanding what the opportunity kind of looks like at the moment for cross-border e-commerce, and we'll just go through you know, what that is and how that operates. Then we're going to put a little bit of a lens on what that means for Australian businesses in particular, before sort of diving into some of the more kind of technical aspects around payments and how that functions and the sort of pain points that your customers might be going through and some of the kind of watch outs when they do start selling cross-border. So just to reiterate again, if you've got any questions, post them and we'll answer them as we kind of go through, you know, at the right time. And then once I get to the end, we'll move back to Michael that's going to take us through some of the more kind of FX hedging stuff. So, you know, first of all, what is the opportunity in cross-border e-commerce and what is cross-border e-commerce? So, you know, cross-border e-commerce is, you know, a business that sells from, you know, in one country, either a product or a service into another country through a digital platform. So e-commerce is obviously sales on a digital platform. And, you know, what we've seen with cross-border e-commerce, certainly around the pandemic, in the same sort of trend as all e-commerce, is it's grown enormously. And the opportunity for businesses that have got online presence to access markets all around the world is more prevalent than ever before. You know, the way I kind of like to think of it is just the world keeps getting smaller and smaller for small to medium-sized businesses, and this e-commerce ecosystem is the thing that makes it smaller and opens them up to new markets. Some of the kind of statistics you know, that we've seen over the course of probably the pandemic, I think one sort of well-spoken one that isn't here is that there's probably been, you know, 5 years of e-commerce adoption from, you know, populations around the world, people shopping online condensed into the space of 5 or 6 months, you know, and that kind of translates through to about 150 million people that weren't shopping online already now have been shopping online for the first time during a pandemic, and that isn't likely to kind of be given up. You know, and all those people shopping online and all the people that were shopping online, you know, beforehand has seen like a 21% spike in year-on-year growth in just cross-border e-commerce. So that's stripping out the domestic component. So some huge numbers, and we'll see, you know, later on, these are kind of big growth rates and big additions even to large markets that existed before pre-pandemic. So the opportunity just continues to grow. Shopify itself, which many of you will be familiar with, is like a web-based platform for people to set up their own websites for selling goods and services online. Saw a 70% growth in new businesses that were signing up in order to kind of expand their digital reach and start taking advantage of some of this opportunity. So, you know, a big ecosystem, a big world, a big opportunity for global businesses. So, you know, outside of that is like, how do businesses really sort of take advantage of this cross-border e-commerce opportunity, and just, you know, redefining what cross-border e-commerce is and e-commerce in general. So the selling of goods and services between, you know, a business and a consumer is B2C e-commerce, and selling between two businesses, which will be brands or wholesalers, maybe brands selling to wholesalers in different countries, would be B2B. The way that most of these companies operate in the e-commerce corridor is, of course, through their own e-commerce website or store, which we've just seen might be being something set up on Shopify or a similar type of platform, or through marketplaces. And marketplaces support both the B2C e-commerce ecosystem and the B2B e-commerce ecosystem as well. In terms of like percentage for distribution through the cross-border opportunity, marketplaces still account for the most. About 62% of global online sales, retail sales and B2B sales actually are achieved through marketplaces. And the big behemoth that continues to grow is Amazon. As we all know, I think during the pandemic, Amazon sales actually topped like 475 billion. And what some of you may or may not know is that nearly 60% of the Amazon ecosystem is actually small to medium-sized businesses, either in their domestic market or a foreign market, that are selling their goods as small enterprises on Amazon. And what Amazon would do as an ecosystem is it would support those businesses to be able to do fulfillment, price correctly, list products, and sell to its global consumer base in any of the markets that Amazon operates in. And that kind of third-party platform grew a further 40% during the course of 2020 to be around 295 billion of Amazon's ecosystem. That's obviously largely in the B2C space. Of course, as a business, we see a lot of Australian companies that are setting up and trying to take advantage of the Amazon ecosystem themselves in markets outside of Australia. And we'll get onto what that opportunity is before. Some other kind of B2B marketplace and just what that opportunity potentially looks like, which is a little bit more fresh, I suppose, would be a marketplace like Faire. Looks on the face of it similar to something like Amazon, but that's actually where brands, and we've got a number of Australian brands that have created, innovative consumer products, are actually listing their products on Faire, and Faire are then marketing those to independent retailers in the States. So Faire is actually kind of fueling a bit of an an independent retailer boom in the US market, and a lot of Australian brands are finding their ways into stores, kind of on the high street in the US. That's actually supplementing kind of an omni-channel global strategy for them. So there's some interesting things happening in the B2B world as well.
David, could I just ask a question? I mean, you got Taobao up there. Should you use different marketplaces for different markets? So China and Amazon may not mix, but would you suggest using possibly a multi-channel approach depending on the market you're trying to focus in on?
Yeah, it's actually a fantastic question. So yeah, Amazon in China wouldn't really work. They tried it and they had to shut their marketplace down because they couldn't compete with sort of a Taobao. Each market that you would look to go to, each country definitely has its own distribution channels and strengths. So, Amazon as an ecosystem is very, very good at taking customers to new markets. So most people will fulfill through their own fulfillment by Amazon services. That is cookie cuttered from the US to Canada to Europe to the UK to Japan to Mexico. They make it very easy for people to just ship inventory into those countries and sell on that platform. And so, if you're already selling on Amazon and you're entering into a new market, then it's very worthwhile following that footprint as an easy in. Now, that's not necessarily going to be the only distribution channel that you're going to have in that market. So, some markets might, eBay might be just as popular, and so you should look at that. If you're going to go to Japan, Amazon isn't the largest marketplace in Japan. If you're selling on Amazon in the US, it could be good to experiment with Amazon in Japan to see if there's product market fit for whatever it is that you're selling. But actually, Rakuten and Yahoo have the largest kind of marketplace share over in Japan. So yeah, there's definitely different considerations depending on the market that you're in and how you're going to access that. Of course, if you're selling on your own website, then there's a lot more to think about when you're entering a new market, because the logistics side of things isn't quite as straightforward and isn't kind of handed to you on a plate like it would be with a marketplace. But of course, there's plenty of information out there as to how you would access new markets if you were selling on your own website. And, you know, if you are selling on a Shopify, you know, one of the things that is made easy for you outside of logistics is payments that we would get onto. So accepting payments in local currency is made a lot easier, even if you're on your own website and selling outside of marketplaces. Any other questions, Gavin, at the moment?
No, I mean, I suppose the other one, so I'll just turn my video. The other one is around, as you said, the enormous growth, 5 years to 6 years of growth within 5 to 6 months. Do you see that continuing as we sort of start to head out of the post-COVID environment?
Yeah, I think so. I think that there's going to be, I think people are used to new ways of shopping, and I don't think that they're going to be given up very easily. There's definitely going to be a migration back to the high street because people are just fed up of sitting in their houses and not going anywhere. And it's going to be interesting to see how much of that sort of translates back through into, back through into potentially a slowing of growth of e-commerce and digital e-commerce. What's interesting with that piece, though, is again the platform like Fair that's actually giving these brands an opportunity to get their goods sold wholesale and then stock back in the high street in the US. So I think that even if you're a consumer brand in Australia and you're accessing like direct to consumer sales through a website or Amazon, you should still consider wholesaling through something like Fair to access those kind of local and independent retailers, which gives you that omnichannel. Gives you that kind of omnichannel access. And we're seeing a lot of customers actually, interestingly, in Australia that have got that kind of multi-strategy, multi-distribution strategy, B2B and B2C approach. Great. So just a quick poll that before we move on, in the last year, have you seen an uplift in the number of clients looking to engage in cross-border e-commerce? We've spoken a bit about the growth that we've seen in the sector. Be interested to see if that's coming through with your customers and your clients, or even in your business.
We've got just a few seconds to go.
Yeah.
Got the results there.
Yeah, interesting. Okay, yeah, sort of. As you would expect, I think that there's a slightly larger percentage that have definitely seen an uptick, and probably the people whose customers are very focused on that. The reason for asking is that the CPA of Australia actually conducted a survey, and I thought the results were pretty fascinating around Australian businesses' adoption into the digital ecosystem over the course of the last couple of years and pandemic. And it was actually sort of surprisingly low compared to certainly the rest of APAC, and then lower still if you compared it to the rest of the world. In that only 32% of Australian SMBs running more than 10% of their revenue online. Now, clearly that's much larger in other parts of the world where the pandemic's had a bigger impact on lockdowns, and you guys have dealt with it much better down in Australia. But I think it goes to show that there's it's still a fantastic opportunity for customers that aren't engaging in this, both in the domestic market and and the international market. Gavin, I don't know if there's any more insight into this survey that you had from the results.
Yeah, I think you summarised it well in that, particularly in the small market in Australia, there's definitely huge potential for growth. And the other thing I like to add is that we find that businesses that are growing are much more likely to be selling online as well. So there's definitely a connection between growth and selling online. So some of you might be considering, why should I do it? Well, it's definitely should be part of your growth strategy. So that's the
Yep.
other thing that came through in the survey results.
Oh, great, interesting. Okay, cool. So yeah, I mean, I think with that growth opportunity, and when you look at the sort of the size of the markets that some of these kind of brands are playing into when they go cross border and also domestically, you know, the numbers kind of speak for themselves, I suppose. So, you know, Australia at the moment, you've got gross merchandise volume sales of 27.3 billion in the e-commerce ecosystem. That's growing at about 23% year on year, with a penetration in that market of, you know, 71% of the population really are sort of buying online. So it's a good market and it's growing. But when you start moving into the UK, Europe, US and Canada, obviously notwithstanding competition, because there's a lot more competition in these markets, but you're seeing similar 20% growth rates from much higher bases. You know, in Europe, you're at 300 billion, US and Canada, of course, 466 billion and growing significantly. And so those growth rates that I think are attached to that online presence that Gavin is talking about is just for the simple fact that you're selling into bigger markets, and you're selling into markets that are just continuing to grow. And you know, that's really where the opportunity sits. And with all the different kind of tools at people's disposal or businesses' disposal for kind of getting more exposure to those international markets, it's really something that, you know, everyone should be assessing, either through a marketplace distribution strategy or through the strategy and how they're going to be appointing their own website and their own proposition for some of these international markets. So, you know, just to sort of summarize, you know, some of the obviously advantages and, you know, upsides to sort of selling overseas and cross-border before we dig into how some of the payments work and, you know, where some of the sort of watch outs are, I suppose, for customers that are looking to do this. So scale, we've spoken about that. You know, moving into these other markets just gives much more of a kind of wider ocean to swim into rather than, you know, a pond in your domestic market. And so that's, you know, clearly something that every business wants to look at, is that higher growth. You know, the risk diversification is, you know, it shouldn't be overlooked as well. So if your sales are low in one market or your domestic market, you can diversify your risk somewhat by kind of expanding your consumer base. And exposing yourself to different rates of economic growth and different rates of consumer spending in different markets. You know, that's not to say that there aren't risks with expanding into new markets and the investment that's required to get there, but, you know, once you're up and running and if you make some fair bets, then that's a good place to go. Seasonality is the other one. So, you know, it's winter in Australia, and you sell summer products. It's summer in North America, so you can turn seasonal products into unseasonable products by moving around the world. And then, you know, competition as well. You can kind of diversify your competitive set a little bit, and you can test products in other markets, potentially move into other areas that are seeing less competition than either your domestic market or other overseas markets you might be in. You know, a good example of that is that Poland in Europe at the moment is opening up to e-commerce in a huge way. There's a domestic marketplace there called Allegro, which is now the 4th largest marketplace in the world, and Amazon's about to launch there. And merchants are enjoying going there because there's not that many products and margins are high. So a lot of different places to kind of focus on and have a look to on that. So I'll just pause there quickly, Gavin. Are there any more questions at this point?
There's no questions in the Q&A yet.
Right.
And I just encourage people to ask questions as we go through.
Good. Okay. Okay. So global payments and e-commerce. How does this process work? Obviously, the most important thing is getting paid. And if you're selling, you know, if you're a business and you're selling cross-border, how you get paid is a slightly complicated process. So we've tried to simplify it as much as possible here, and there's a few things that are worth, you know, kind of pulling out and understanding a bit more, and hopefully just gives you kind of a teaser that if this is something that's interesting to you that you can kind of dig into it a bit further. So what this chart shows us is that at point number 1, we've got a merchant in Australia. Over to point number 2, they're selling products in the US. And so they list their products for sale in the US at, say, $100 on any of these platforms. So it could be Amazon, eBay, Shopify, or a website that they built on Magento. Moving on to below to point number 3, a consumer in the US comes in and buys the $100 worth of products using their bank card from Wells Fargo. Jumping over to number 4, a gateway acquirer or payment processor that the Australian merchant would have signed up with, which could be a Stripe, an Adyen, or Amazon's own ecosystem, would process that payment. And at the point of processing that payment, they would deduct a fee of around 3%, so $3, which gets split between the bank that's issued the card, the payment scheme that sits in the middle, and then a small percentage goes to the gateway acquirer or processor for processing the payment. The gateway would also charge the merchant some extra money for the processing services that they're providing. Then if the Australian merchant wants the money to be paid back to them in Australian dollars, the gateway will put a further markup of about 3 to 4% of foreign exchange fees to deliver that money back to their Australian account. So you sell cross borders, then you kind of incur through your payment processing system probably 6 to 7% of a revenue kind of take on just standard payment processing fees. Now, the other piece that we were going to talk about just very quickly while we're on the topic of payment processing was, buy now, pay later, which is relevant to kind of cross-border and domestic, because, when we're talking about distribution channels and how people are selling on marketplaces or their own website to access customers, the payment methods that they use in order to get conversions at checkout are very important too. And I think, down in Australia, there's obviously been a big explosion in this buy now, pay later business, same the world over. And if you're smart about it as an online retailer, you can access various different buy now pay later schemes that are relevant in the market that you might be selling to, but not in Australia, and still be able to kind of offer that product in the market even if you don't have any presence. The way this process works quickly for buy now pay later, if people aren't familiar, so the customer's going to buy a product from a merchant. The customer opts to pay via buy now, pay later through any of the providers. The buy now, pay later company will just pay the merchant the full freight of the sale up front, and then they'll collect the money from the customer in 4 installments. And so if you're selling cross-border, the company that you're doing the buy now, pay later with will take care of collecting that money in 4 installments from that customer that might be based in the US or the UK. And they'll pay that money typically only to a domestic account in the country where the sale's been made, and we can sort of step in at that point to make sure the money then gets back to the merchant, or the merchant can handle that money in a way that makes it smooth for them, even if they're offering this service in a market that might not be their own.
So, David, just on buy now, pay later, obviously it's a big issue in Australia. Are you seeing the growth in buy now, pay later in other markets outside of Australia?
Oh yeah, definitely, Kevin. I mean, of course it's very much blown up in Australia. But if you look at the US with Affirm, who were really the first company to do buy now, pay later. They IPO'd recently under much fanfare, I think, as a sort of $25 billion company or something like that in the US, and they've only done it in the US market. We've been working relatively closely with Afterpay actually, as they've expanded into the US, into Canada, into the UK, into Europe, and we know these folks pretty well. Klarna are a big one out of Sweden, I think, that are coming down to Australia. So it's a hugely popular way for people to shop nowadays. And yeah, like if you're selling cross borders and you want to adopt kind of local payment methods, which is a key part of conversion, then you want to be kind of looking at this in the markets that you're looking to sell in and see how you can offer the most preferred types of this for the consumers that you're targeting.
And we do have a question from Malcolm on buy now, pay later as to who wears the risk of payment default? So I'm not sure if you know the answer to that, but that's a question from Malcolm: is who wears the risk of payment default?
Yeah, so I think ultimately it's still borne by the merchant. There's different ways that the buy now pay later schemes manage that. So typically what they'll do is they'll pay out when the sale happens, plus or minus a couple of days. So if I went back to my previous slide, whenever a merchant gets paid, they don't get paid instantly, of course, when the customer actually makes the sale. There's normally a lag of between 3 to 14 days in some instances with when they get paid. What the buy now pay later schemes will often do is that they will pay, say, 2 to 3 days after the sale's been made in full, and in the meantime they'll be continuing to sell. And if sales between the time of the merchant getting paid and a return coming through, like someone returns an item or there's a chargeback or something like that, if the sales volume that they've been making between the payment and the return is a net negative, then they'll debit the money back from the merchant to make themselves whole. And they'll keep a risk rating of the merchant as well. So if the merchant has lots of returns and chargebacks, then the window of them getting their advance is going to increase. And of course, if they continue to get lots and lots and lots of chargebacks, eventually they'll be switched off and they'll be chased for the kind of negative funds if they've been paid that in advance. So the buy now pay later firms definitely, they chase the merchant for the fees. I suppose the question around who wears the risk, if the merchant ends up defaulting, then it's the buy now pay later company that is going to wear the risk. That takes the risk on the lending. Hope that makes sense. Okay,
It
cool.
does, yes.
Great. Yeah, some of these payment ecosystems can get a bit of a tangle of wires sometimes. Fortunately, I very much enjoy getting involved in the train set and seeing how it all works. So just to sort of finish up, I guess, what we've looked at there is like how the front end payment systems work, where the fees get deducted. It'd be remiss of me not to say sort of where we fit into this. So kind of what we design is a bit of a back office payment system for all of these different payment methods and selling cross-border. So, we open our customers' bank accounts effectively in all the countries they might be selling in, and those bank accounts become compatible with the platforms or the gateways that they're selling on, so that they can receive local currency payments in the country that they're selling in into these accounts and then manage the foreign exchange themselves. So in the example that we went through before, where you might be getting an extra 3 to 4% of a foreign exchange markup, the merchants can manage that with us for 0.5% or less. And they can also make same currency payments out of the accounts, manage their tax payments without having to move money back to Australia and then sending it back to the US to deal with some of their kind of problem payments and compliance things. And then we would also connect to Xero and as for their accounting services to make sure that everything kind of automates and pops through. So that's kind of where we sit in, and also help pay suppliers. So if they're like selling in the US and then they've got to pay suppliers in China, we would collect their US revenues and just send those straight over to China rather than having to take them back to Australia and then send to China again. So just making the operations a lot more efficient. I think I saw a question pop up, Gavin, but I'm a bit of a novice on this, so I can't see it.
There's a couple of questions. One's on managing foreign exchange risk, which I'm not sure if you or Michael will respond to that. And there's another one on just on any insights. There's a business is selling in Australia and New Zealand, and do you have any insights on the Asian market? Well, I know you sort of touched on China and Japan. Is there any sort of insights that you might have on how to actually enter some of those markets in Asia?
Yeah, we'll start there and then let's go to currency risk, because that's definitely Michael's world. Yeah, so entering the Asian market is definitely an interesting one. It depends on how the customer's selling at the moment. So if they're selling on their own website, or whether they're interested in accessing marketplaces, it might be that they're open to doing both. you know, on their if they're selling on their own website, one of, you know, very critical thing to do is make sure that you've got the right payment gateway connection in there, so that local payment methods are being accepted, so that you can sell your goods in the way and people can pay for them in the way that they're accustomed to. Obviously, you've got to set realistic timeframes on how quickly the product is going to reach them, depending on, you know, where they're buying from. A lot of the time, people in some of the Asian markets are used to longer delivery times and are happy to shop for international brands. So you just need to make sure that that is, you know, clear and, you know, kind of what those expectations are, you know, are set. You've also got obviously language issues to deal with, and so do you want to go down the road of converting your entire site or your checkout experience into a new language before you've tested the market? Probably not. It might be better off just paying for some advertising in those markets, seeing if you can get any traction at all with the product. Make sure that you've got some local payment methods in there, and if that proves worthwhile, then you can look to do some bigger like language conversion on your site. And that can even involve partnering with people that will just localize your entire like website and your customer facing experience to any of those markets that you're like looking to access. If you're going on marketplaces, then you would probably be looking to like Shopee or Lazada, who are, if you're wanting to target kind of Southeast Asia. China, obviously you've got Taobao and Alibaba, AliExpress, and Tmall to sort of target there. The challenge that a lot of international brands are going to have, though, going to China without getting into the long history of it, is that it's just unbelievably price competitive. So the volumes always look very attractive for the size of the market that exists there, but the margins are just razor sharp. So it's often very hard for international brands to like make a big impact and a big splash in that Chinese market, especially if you're a sort of smaller brand. I hope that's helpful. So I guess on to currency risk.
Yeah, and I think now you'll finish your presentation, David. I think we'll now go over to Michael, who will probably address currency risk in his presentation.
Great.
Michael, we'll hand over to you.
Thanks, Gavin.
Oh, there was one more poll actually that we just wanted to do quickly, which was, and sorry, I forgot that this was at the end, but just which accounting software do your customers use? And that's useful for sort of, you know, us to understand, I suppose, for we're looking to do lots of integration into accounting software, and you know, holding our hand up, that's useful information to know what features we should be kind of trying to put together for, you know, CPA customers and for yourselves to make your life easier if you use our service.
I might add, you can add multiple responses rather than just one. So.
Cool, interesting. Okay, great. Well, thanks everyone for your time. And if you can kind of think of any questions as we go through, pose them, and then we can circle back at the end and go over any other any of those if you think of any as we go through the rest of the presentation.
Great.
All right.
Thanks, David.
Perfect.
Okay. Look, what I intend to kind of speak to today is to just firstly cover off the market that we're operating at the moment. You know, I think Dave summed it up quite nicely to say that in the e-commerce space, you know, we've seen close to 5 years of development or 5 years worth of growth in a 3-month period. I mean, I think, you know, almost the same can be said for the type of volatility as well as the level of uncertainty that we've definitely observed, you know, across, you know, FX markets, but I think in particular for a lot of importers and exporters who are operating and based out of Australia. I think the AUD in particular is, you know, absolutely, I suppose, borne the brunt of that dismantling of markets that we saw in March or April of last year. But But equally, just to kick things off, we've got another poll here for the audience. And just to start things off, be interested to know, in terms of everybody's understanding or perceptions over where the AUD has moved over the past 12 months. We'll just pose a question there in terms of what everybody's read on the moves has kind of looked like. It's got a couple more seconds. Okay, so look, interesting mix of responses, but look, I think the short answer is that the AUD has been I think trading in the type of range that you'd expect over something closer to a 5, if not a full decade type of time frame. The fact that the Aussie has ranged between 57 US cents, it did plummet, as I mentioned, to a 17-year low in March 2020. And it has almost kind of self-corrected or auto-corrected all the way back up to 79 US cents, which is frankly where it was in the pre-COVID-19 environment, which was the start of 2020. So I think a lot of people can probably appreciate that if you do have exposure in foreign currency, to operate in an environment where either your cost base is varying by up to 35%, or in fact your revenue streams are varying by 35%, simply by virtue of an exchange rate movement. Again, we can appreciate the types of, I think risks which kind of will surface in terms of underlying business models and obviously the financial assumptions to which is linked to those. So I think, look, it's been a year where, again, we probably haven't seen this level of volatility, frankly, since the GFC. I think for a lot of businesses, particularly who are traditionally operating out of Australia, but now are accessing global markets. Again, a lot of these businesses haven't necessarily haven't had the benefit of experience or the benefit of maturity, having not operated through this level of trading band previously. So it's been, I suppose, an environment where there's been a lot of firsts, and I think a lot of resolve has certainly been tested in the FX markets over the last 12 months. I think, look, finally, too often, I think, the word, volatility is often associated with the Aussie dollar in particular. Look, it is used as a proxy to global risk sentiment, which is to say if there is a little bit of uncertainty or if there is a little bit of panic or fear across global markets, again, typically the AUD will wear the brunt of that type of sentiment. And that's definitely been the case over the course of, the last 12 months. And I think in terms of what the future holds for the AUD, I think it probably is at a little bit of an inception point, which is to say that if the rate of COVID recovery, if the global vaccination program, if these things all do result in relative stability and a full spectrum of economic recovery. And again, I think that type of narrative would bode well for the AUD, given it is supported quite heavily by China's demand for Australian steel and obviously commodity prices at its core. But again, the reason why we are saying it's a relatively uncertain, I think, roundabout at the moment for the Aussie is because of the global pandemic and because of an assumption, validated or otherwise, that we are expecting to see a little bit of dispersion now in terms of how markets globally do start to recover. And I think, frankly, up until the emergence of COVID-19, I think a lot of the more mature and developed markets globally were almost acting in sync. There was an expectation that inflation was going to start to increase, that our monetary base was already at a record low. But I think now, as we move out of that year one response to COVID-19, I think it isn't too much of a stretch to assume that there will now start to be a little bit of dispersion in terms of the economic recovery across the world. And again, I think that's going to create a little bit of instability, particularly for the AUD, and trying to predict, where to from here. But look, I think in summary, what we'll talk about briefly, and I can see there's some questions here around, FX risk management. I think, just having a fundamental assumption, or I should say understanding around what's happening in the market today is very important. The fundamentals don't shift admittedly too much, but I think it's really important to understand, particularly when you're dealing in multiple currencies, what cycle are we currently operating in? Is that a cycle of a declining Aussie or an appreciating Aussie? And at the moment, I think the difficulty is that there isn't absolute clarity. And again, before 2020, it was frankly an environment of a declining Aussie for a period of 3 or 4 years. And if you look back through the charts of 2015, 16, 17 and 18, it was almost a one-directional style of narrative for the Aussie, where it was coming off some of those post-GFC highs. I think right now it's kind of grounded itself, and it is at a potentially a little bit of an inflection point. So what I intend to do, I'll just jump across to the next slide here. Before we kind of talk about managing FX risk, and again, Dave did center a lot of his conversations around the opportunities which present in operating globally. He also talked about the enormous trend and explosion in e-commerce. But I think what I want to almost ground ourselves on a little bit is, I suppose, some of the risks which may or may not be so obvious. And I will say that FX risk at its core, I think it does remain probably one of the most overlooked challenges of Australian businesses who are either operating globally because of their supply chains, or whether they're operating globally because of a customer base or an employee base as well. The risk associated with inactivity can actually be quite extensive for Australian businesses. So what we'll do before we jump into it, I do have just a quick poll here for the group to consider. The question is, what is the biggest challenge you find your clients have when managing FX risk? Okay. Right, that again, it's quite interesting. I think the biggest challenge is I think quite unanimously is around obviously managing the volatility. Again, typically the role that we often play with a lot of customers and across a lot of the accounting environment as well is obviously just looking to raise awareness and consideration around the types of options and the types of products and services which frankly are available, not just to e-commerce providers, but to SMEs and mid and upper corporates as well. The reality is, in today's environment, there are FX specialists, and there is a host of available tools which can often simplify the availability and equally the access to risk management tools. So look, I think what would be a valuable exercise, I'm basically going to walk through, I suppose, 4 key considerations that we often or regularly talk about for SMEs or, again, e-commerce providers who are operating globally. A lot of this is baselined against having a relatively basic, I suppose, currency plan or hedging plan in place. But I think for, firstly, global businesses, I should say Australian businesses are selling globally. Look, it's really important to kind of understand and to crystallise, the types of currency risks that you do face. Kevin, I can see there's a question in here around, understanding the currency risk, and it's actually, quite relevant to the first data point on my page here. And the question is around, what are some of the ways that a client can mitigate exchange rate exposure when purchasing from overseas suppliers in a foreign currency, when their sales cycle is around 6 months. So again, I would align that to the type of currency risk which we kind of often talk about, which is it's essentially at a transaction or an invoice level. It's quite a typical example that an importer, for example, they may well receive an invoice in US dollars on day one, but they've got 6 months terms in order to settle that invoice in a foreign currency. Obviously in that type of example, the FX risk surfaces on day one, and an importer or an Australian business can make an active choice to cover that risk on day one through the use of something like a forward exchange contract, which would provide absolute certainty and a definitive cost in Australian dollar terms against that US dollar invoice. Again, forward exchange contracts readily available. At OFX, particularly in the post-COVID era, we saw, I suppose, across the board increase in forward exchange contract and forward exchange participation through the portfolio. And again, what you do see is when things do get a little bit unnervy or I suppose a little bit rocky in global markets, demand for those types of products do increase. But I think, again, if you are using forward exchange contracts already, it's a fantastic and simple way to mitigate risk at an invoice level. I think there are certainly considerations around how you use that type of a product versus looking at alternate products. And what I mean by that is that one of the big objectives in mitigating risk isn't around necessarily beating the underlying spot rate through the course of that exposure, but it is around actually risk mitigation or risk management, which is to say you might look to use a range of forwards layered across that 6-month period in order to smooth or reduce your participation at some unfavorable, I suppose, rates. So again, if you've got a 6 months exposure, let's say it's worth a $100,000 invoice, you may look to cover that across 4 forward exchange contracts spaced out evenly, at probably 6-week cycles. Again, if you are using layering techniques and smoothing techniques, you will ultimately land on an exchange rate outcome which is more reflective of an average rate over the course of that 6-month period, versus making a currency choice based on one particular point in time on one particular day. And again, that is a very easy example to say that forward exchange contracts are absolutely a well-used risk management tool. But again, there are some considerations in terms of how they're used, even at an invoice level, let alone at I suppose a holistic level as well. So look, what we'll say is that the atypical type of risk is invoice related or matched to an actual invoice. The other really common type of risk for e-commerce providers, frankly, is translational based risk. In that people selling globally will be receiving revenue streams globally, and at the end of a reporting period or a tax year, they've got to repatriate and report in Australian dollar terms. And that translation of multiple currencies back into AUD can actually be quite a big risk for a lot of e-commerce providers. I'm conscious of time, so look, I'll probably speed through the final couple of data points, but I think it is important to have, secondly, an accurate view over currency and future requirements. Again, I think that is a relatively obvious data point, but something which is often overlooked. I think thirdly, look, we too often do talk about risk mitigation, risk management. I think ahead of, frankly, risk elimination. And if you are a business which has both a revenue stream and a cost base which sits outside of Australia, again, the logical piece is to use your revenue streams to obviously cover those cost provisions as well. You may also have the opportunity to leverage cross-currency opportunities. Again, if you were to be selling in a US market, receiving US dollar income streams, and you may well have a cost base which sits, say, in the UK, too often we'll see the natural conversion of US dollars into Aussie and then Aussie back out to sterling. And in that circumstance, there's a natural opportunity to essentially do a cross-currency conversion, which is to use your income streams to offset your cost base without that translational conversion back into Aussie. Look, just finally, something that we talked on briefly around forward exchange contracts. You know, once you have, I suppose, architectured a very basic currency plan, not just the selection of product, but I think the use of the product is incredibly important. So look, just finally, you know, as Dave mentioned, one of OFX's role is that we do provide, you know, global currency accounts, which do support, you know, e-commerce providers and global businesses who are looking to collect locally in foreign currencies. We do offer a range of products around your limit orders and forward exchange contracts. And I think at a functional level, you know, obviously that is supplemented by things, you know, like rate alerts, like a mobile app, as well as some commentary just to ensure that customers are well informed around the markets of today. So just finally, we may well have some time for some additional questions, but look, we'd love to hear from you. So we work actively across the accounting and fin services, you know, ecosystem. If you do have any clients, or equally if you'd like to connect with us yourselves, you know, there is a email address here, Samuel Pitt at ofx.com is obviously the key point of contact, which would be more than happy to you know, field any of your inquiries in follow up to this webinar.
Thanks, Michael. That was really, really interesting. I know we're very short on time. I don't know if you can see the chat. We have a question from Arthur, who in the US, an Australian-based client who will receive US dollar checks from the IRS because they won't do EFTs. What would be the most efficient way to convert to AUD in that situation?
Good question. Checks in the US are obviously, you know, they're very common. We've kind of written them off to some extent in Australia. You know, unfortunately, we don't actually accept checks necessarily as a means of payment. So we are very account to account focused in terms of, you know, injecting US dollars and converting out into Aussie. You know, we could well, you know, look to receive from a bank account only. So obviously there'd need to be an entry of that check into an account, either that be his own account, or, you know, potentially that of a custodial or an accountant. So we can accept from third parties, but obviously the receipt of checks is still a little bit of a challenge.
The only thing that I'd add to that is it's you know, worth probably getting in touch separately and having a chat with someone, because it says that they won't do EFT. It depends on the circumstances around the IRS, what the refund's for, why they're paying you, which bank account you're giving them to do it. So they won't do international wires, of course, outside of the US to an Australian account, but they oftentimes will do to a domestic US bank account. And so there's potentially things that, you know, we can do to help there, depending on the customer, what their needs are, what the reason for the IRS payments are. So, you know, if it's a pain point, get in touch and we'll see if there's anything that we can do to help. Oh, I think you're on mute, Gavin.
Sorry, it was the comment of 2020 and moved into 2021.
Yeah.
There's a few other questions, sort of run out of time, so I apologize for that. What we'll do is we'll work with OFX to get responses to some of those additional questions, and we'll send out a recording and a document with those questions to all the people registered for this webinar in the next few days. But I'd really like to thank OFX, David and Michael for their contribution today. I think it's fantastic. I really appreciate OFX's sponsorship of today's discussion. I think I now hand back to Amy to close off the session.
Thank you, Gavin, David and Michael, and thank you everyone for your participation. In the next 3 working days, you'll receive an evaluation survey accompanied by the recording of this webinar, along with hopefully we can get to the answers for some of the extra questions we have. And we do appreciate everyone's feedback, as it is extremely valuable to deliver better events for you. So thank you again, and we look forward to welcoming you to another CPA webinar soon.